Welcome, guys. Welcome. Now we have something completely different from what we were doing. Last time when we had a session, I was teaching you about matches. Now it's something completely different. We got some money and we purchased an FTMO account that is of $10,000 using $100. So anyway, before we get to FTMO, today I want to teach you about this particular strategy. It's called Mr. Precision strategy or precision strategy. So we are going to do it on MT5 or MT4, and this is a way to go. So these are the things that you need. You need TradeView. Now you also need the MT5 or MT4. So for TradeView, I'm just going to use that one for deriv, and these are the things that you are going to use so that you are able to carry out your trades. So you can either trade Forex or volatilities using the strategy. It's working. So let me remove all the indicators so that I can show you how we go about it. So this is the first step. So you need to understand that I only trade using 4-hour time frame. I use 4-hour time frame. Now we head to indicators. For indicators, I use MACD. That is MACD. I use Arun. And moving average. Moving average. For moving average, I need to adjust the length. So length we use 50. Use 50. Use 50. Use 50. For the other one, we change to 20. Change to 20. Something else, we change the style. We need to use a. You need to change something very visible. So that's the way to go. For Arun, you need to change here. There are some settings you need to change. You need to length adjust to 4. Yes, those are our indicators. So this is how you go about it. So after you have set your indicators, you also need now to have your MT5. For me, this is a demo. On FTMO. We purchase an account. I cannot trade now. I have already traded it during the day. So I tell you, I'll give you guidelines on how to go about FTMO. They are going to fund you. So let us go directly to what has brought us here. So I want to give you a strategy. This strategy is going to give you an entry to your market. It's also going to give you direction on when to leave the market, to exit the market. So first thing I want you to understand is after you have created you have selected your indicators on Arun, you can see if you click inside the Arun, you are going to get these dots. These dots are very important. Let me select a volatility that I'm going to teach you using. Can just use either to show you an entry that previously we had. So let me just get an example. So for example, you have this. You have variety 1s. So what you are supposed to see, what you are supposed to follow is, once you click on Arun, you are going to see these two dots. So ensure you have a line that crosses through the two dots. Then look above, that is on MACD. Ensure that line touches a candlestick from your MACD that suggests a strong either buy or sell, bearish or bullish, right? So in our case, we can see the red candle here. It was a strong one. It was a strong one. You can compare and see even on our real candles, it's a strong one. So what you do, your entry should be direct opposite. If it was a red candle, you're supposed now to get an entry that shows a green candle here. Okay, so this is what you do. You wait, you ensure that if you are going for a buy, if you are going for a buy, the green candle is above the 20 moving average. Okay, so in our case you can see we wait. If this was our entry, we wait where we had our first green candle. It was there, and that was above the 20 MA. So that was a perfect entry. But you're supposed to first wait for the first candle to form to tell you. You're supposed to wait for the first candle to show you that it's a clear color. You can see there are also fade colors. Ensure it's a clear color. So with our first candle, you can see it was a clear color. So we could have made our entry at the second candle. That is a buy. The only time you're supposed to exit your trade is when now you realize that the candle that was being formed has turned from the original color. It's now a faded color. So this is where we would have not existed, exited our trade. And as you can see, you can count the number of pips. If maybe this was our entry, it suggests this was our entry here. So that is 9041, 9041. Then you exit at 9113. So you have approximate of 60 something pips. 60 something pips. So if maybe one pip, you can get to know how many. Just a minute. You can get to know how many pips. Not how many pips. How much is worth 60 pips in volatility? 10 honest. So let us just use ChatGPT. It's going to be a clear one. ChatGPT is going to be a clear one. So let us see how much are we worth if you made such an entry. And let us add something with a lot size of 0.5. Let us see how much you would have made. This is wrong. Let me get the right answer. How many dollars are worth one pip if you use a lot size of 0.5 on volatility 10 1s? Is too little, so we cannot use 0.5. Let us suggest maybe 2. I think 2 is okay. I trade forex, not volatilities, so I just choose a volatility maybe to show you, but they work the same way. That's why I don't know how much is worth one pip. So it's too little. It's too little. You mean volatility 10 on S is that less volatile? So in any case, you just know you have made 60 pips, which is very important. Very important in a trading journey. Very important. Let us get another example. Let us get another example. So let us get another example. Another example. This is not a good one because you can see this was not a good candle. So assume that. Just see this one. So this is a green candle. So you wait for a sell, right? You wait for a sell or a red candle be formed here. So the red candle, and also ensure that it's below the 20 moving average. So you can see this is where we get the first one. Okay, now this should be our entry point here. From here you move until it starts fading. So this should be your exit point, somewhere about there. So you can see they are very accurate, very indeed very accurate. So let us get another example. Maybe you can look at forex. Today I've been trading on euro. Been trading on this pair, so can show you where my entry was. So you can see it was a green, it was a green one. So you wait for a red and ensure it is forming below the 20 moving average. So after the first one, you go for a sell. You go for a sell until where it starts fading at this point. Okay, the fading, you see it, this will be a green candle, right? It start from, these are very strong green candle, so you can't wait up to this point. Already up to this point you have already seen this is a green candle forming, so this would be a exit point. And you can see we are using 4-hour time frame, so you can imagine the number of pips from here to here. There are so many, and that's a lot of money. That was what I've been trading today, and I made over $500. Something else you also need to do: risk management. Ensure you are not risking more than 10% of your account. That is very important. So I don't think, guys, there is any other question. If you have a question, kindly, this is free. If you have a question, contact me. I'm going to guide you on how to go about it.